This is Tech from the Top. In this edition, we'll be discussing the digital transformation era, how to stay on top and not be left behind. We're going to be covering everything from AI to blockchain to crypto and CBDCs. And by we, I mean myself, Jessica Walker, and my guest, Nitin Gaur, founding partner of IBM Blockchain Labs and also Digital Asset Labs. With 22 years of experience in IBM, we're going to jump straight in. Before we do, I'd like to thank the sponsors of this episode, Fluid Finance, the first bank alternative linking directly to your Web3 wallet, available to anyone globally and free to download. The link is in the description box, so make sure you go and check it out. So welcome to Tech on Top. Joining me now, I have Nitin Gaur, who is the founding partner of IBM Blockchain and Digital Asset Labs. 22 years in IBM, and today we are jumping into adoption and how we see the digital transformation from both AI, blockchain, cryptos, and obviously CBDCs. So Nitin, thank you so much for joining me today.
Jessica, thanks again for the invitation. Glad to be here in Dubai and looking forward to this chat.
Great to have you, and it's great to catch up as always. I want to jump in first and just look at IBM and their turning point when it comes to blockchain adoption. As we've seen, blockchain has been the big buzzword of the past few years, but you've obviously witnessed this transformation from an extremely large, innovative organization. So what was that process like?
Yeah, it was a lot of heartache, a lot of pain points. I went down this path about a decade ago when we were doing mobile payments, and in every conversation, blockchain popped up. And so I went down, spent 3 months researching it, and then went back to some of the leadership at the time, at IBM to say, hey, this is a transaction system we need to look at. Has the potential to change the world. And it took me 2 years to convince them, because at the time, blockchain was synonymous with Bitcoin, and Bitcoin had its own baggage in terms of reputation and what it's meant for lack of understanding. Of course, that's changed in the past 13 years. And after 2 years, we went all in the sense that we built a team. I built a global team. I went around the world, built 12 innovation labs, help our clients at the time, 90% of the world's banks, understand the soup to nuts, what it takes, what's the impediments, the challenges, the technology that needed to be understood, adopted, and crafted at the end of the day. So it has been a long journey. I've had enormous amount of failures that I've learned from, some successes that you want to build upon. And I still think we have a long way to go. So
you've said a buzzword there, which is innovation. And I think there is that kind of sweet spot IBM must have crafted it, which is innovation, but then also being kind of compliant and working with this kind of regulatory boundaries. Would you say that was one of the main challenges throughout the years?
It was. It still happens to be, because we do work with the regulators quite a bit. We do work with banks and financial institutions, which are heavily regulated. And so the question then becomes is how do you technology alone doesn't do good. You have to ensure that it's in the framework of regulatory, elements, and it also serves the need and solves the problem. And so navigating those through and ensuring you have enough knobs and switches to be able to craft something that fits in solving a human problem, solving a business problem, solving, within the confines of regulation. I think it's that is the skill. It's not just being purely technical, but technology does help. But understanding what applies is something which I've learned over time is more important.
Now we're going to hone in a little bit more on some different tech topics, and diving into you and your background. I was like, there's so much that we can discuss today. So it was kind of hard to pick a few. I've gone with AI, blockchain, of course, and then crypto, but kind of falling into the category of CBDCs. Out of those, which do you think will be the biggest disruptor in the next 12 months? Which is the one we're going to see the most?
I just think that's confluence of all of those. I think AI is already changing our lives, in some ways good, some ways bad. I've been heads down on this. In fact, my educational background happens to be in AI. So in the last 2 years before I left IBM and moved to State Street now, I spent a lot of time in applying AI to blockchain per se. So AI is changing our lives as we know it. We've seen that with social media. We've seen that with structured, unstructured data, and how AI shapes that up. In some ways good, in some ways bad. But in context of blockchain, I think what's interesting to understand about blockchain is that blockchain is all about linked transaction. And that's a natural fodder for AI to find connections and find patterns with those connections, which takes effort in traditional applications. So in traditional applications, you have to find different types of data. You have to organize the data. You have to find the linkages, which is what we call training, and you then derive insights from it. In context of blockchain, the idea is that all the transactions are linked. And so application of AI becomes relatively easier. The challenge is that a lot of blockchain data is raw. So you have to do a lot of elements of entity resolution and resolving these wallets and these tokens into what they really mean for human consumption. And that is where I think the challenge, resides today. And so a lot of compute capacity needs to go. I'll say one more thing, Jessica, is that while AI and blockchain seem to be going hand in hand, I think that the compute infrastructure needed to handle them both is going to be enormous. This is the CPU, the GPU, the power requirements to be able to do all this massive processing of data. And so my recent article that I've been working on now is focusing on ESG, focusing on not just the innovation that blockchain brings about, but also the compute requirements to actually our ability to handle them both at the same time. And I don't think we're ready for it.
So we'll start with AI then, and then we'll roll over into CBDCs. Because one thing you've mentioned there is just like the sheer necessity of computing power, what we're going to see from deep learning and machine learning. Is this going to be a, for better term, rich man's game? If you have the supercomputers, if you have the processing power, you can compete and take part in this race. And for some emerging countries, they will miss out.
That's a great question. And I think it is going to be in the initial sense. You have to have a lot of investments. And we've seen that with crypto. The genesis of Bitcoin that happened after the global financial crisis was meant to have an egalitarian path and giving access to financial system for the whole world. And we see some of that today. Like if you're an Ether in US and Ether in Vietnam or Ether in India, the access to the systems is exactly the same. The access to the DeFi protocols, the access to marketplaces, which is not the case for existing securities and existing financial market infrastructure that we have today. So there's a little bit of that thematic element to say that there is a potential out there, but it is going to be a rich man's game because the complexity, the education, the access to compute power today, and that's evident from elements of mining and staking that we have seen in the crypto world, it is a rich man's game. And it's not easily accessible for the underprivileged and emerging economies that may not have access. They may have the talent, but they may not have access to. And my only hope is that, as I've always equated the layer one protocols to be a nation state status, which is trying to attract talent, capital, energy from all over the world, that you can bring your talent and suddenly the barriers to entry because you're talented is not there. So you should be able to bring your talent to these ecosystems, craft a DAO or a smart contract and monetize that and eventually uplift yourself and then make that investment into the infrastructure. That's my hope. But as it stands today, it's all concentrated into richer economies. If you look at chain analysis data, for example, which to me is concerning.
And would you say DAOs are the solution to the problem there? Because for everyone that is involved in cryptocurrencies, they would say, it should be easy to access, entry, kind of low barriers for thresholds into this emerging tech space.
I just finished an article, I actually published it yesterday on DAOs, and I focused on private markets and DAOs. I don't think DAOs are all the answers. I think DAOs sort of makes things more transparent. So it produces elements of transparency. It encourages participation, which is not there in most markets. It's not there in traditional finance. It's not there in private markets. It's barely shaping up to be in crypto markets and liquidity. So I think DAOs solve those problem of transparency, that you have visibility into who's voting and who has what access and what's happening in the real time. You do have access to, again, liquidity because you're able to move these crypto assets that may be trapped, or you may be able to lock in one DAO and move to another DAO. You do have an ability to encourage participation for entities who you want them to participate and not have few actors make a decision on their behalf. But DAOs by themselves don't solve anything, because DAO at the end of the day is a figment of our imagination and our human sort of crafting the tokenomic systems behind it, the governance models behind it. So DAOs are only as good as the tokenomics, the governance, the liquidity models, which has the checks and balances that needed to be sustainably functionable, which I think is sort of missing today, in my opinion.
Got it. So now if we go back to kind of AI and the integration, I think it's hard for regular people that are listening to this podcast, that are kind of walking down the street, that see the buzzword of AI, but they don't see it in practice in organizations. I think that's why people focus on cryptocurrency price so much, because it is something that's more tangible. So next 5 to 7 years, where are we going to see AI? What kind of business sectors are we going to see it integrated in?
So I think AI is everywhere. In fact, AI is embedded into many facets of crypto. That includes the marketplaces. In fact, I've been working with various intelligence agencies, and this is all non-confidential, as you know. They've been looking into connecting the dots, finding patterns for financial crimes, looking into figuring out the pattern of movement of capital around the world, as we can see. So AI, in terms of not just taking analytics, but having a feedback loop that gives you the probability of where their capital is going to move, probabilistic model that lets you imply that if you were to, Jessica, open a wallet, the probability of that wallet being involved in financial crimes, all that is happening as we speak. So I think AI is embedded. I view AI as an embedded technology now, that you have every element of your action, whether you're transacting or whether you're driving a car, generates data, and something needs to take action on the data, needs to compute the data in some relevant context. So AI to me is embedded, and it'll always be embedded. It'll only get better over time, which I think largely the social media and what we've done with disinformation has been misuse of AI. But in many cases, AI has done well for us. And so I think that artificial intelligence, machine learning technologies are embedded tech, and we simply have to understand as to what can we do to leverage the technology itself for our benefits, per se.
What was your opinion? We saw recently this kind of generational shift of kind of fairly younger, more tech accepting groups of people acknowledge AI is here to stay. It's going to be encompassing in what we use. Older generations, there was potentially like a fear-mongering element of AI is coming to take your jobs, and beware of this new technology. When you saw that, what was your immediate reaction to that?
We've seen that during internet time. When we had the digitization process, what internet brought about, the same argument was there that, look, it's going to take away our jobs, because suddenly now, and I give this example all the time, there are no more travel agents. All right, and I'm sure none of us really go to a travel agent to book our tickets. But we do have Expedia and Trivago like entities. They still provide the same services, but they give us an experiential model of a travel experience as opposed to simply booking a ticket. And I think internet gave rise to millions of jobs around the world, and we've seen the exponential growth in that. So I don't, any technology is deflationary in nature, and technology in general gives rise to new science, new imagination, new thinking, new roles, new jobs. So I think it's certainly a growth potential to it. I don't subscribe to that notion that AI will take away our jobs, because it'll create new jobs too, because suddenly now you have, just like any new technology creates new platforms, disintermediates a few players, but you create new intermediaries who are in the system. And we've seen that with crypto as well. So from that perspective, I don't subscribe to that whole element. I do look into the biases that AI encompasses. I look into ethical use of AI, and some of those sort of constructs that I personally, when I was at IBM, would look into those in terms of what induces bias into these systems. So again, we've seen that in the US, when AI is used to make your decisions, like robo-advisory, for instance, or making a credit-based decision to extend loan for your house, your first house. And if AI has those biases that, whether it's your race or your earning potential, then it decides against you, well, that's a problem. So we got to solve that problem. So to me, the ethical use of AI and the bias, and still using AI as a tool to augment our function, not replace the function. I still believe in that to be the model, till we are comfortable with it for AI to make decisions on our behalf. And so for now, I'm of the opinion that we should let AI help humans make better decisions, informed decisions, be able to sort of drive insights from consuming this enormous amount of data, which is humanly impossible to do. That should be the place AI should be in at the moment.
And how does AI make these decisions? Is it only database, or is there other metrics as well?
Oh, that's a big question. So, of course, you have structured, unstructured data. You have different data sources. Your modeling relies upon what knowledge you want to induce, and that modeling relies for us to test those models and derive insights, and that insight then leads to a feedback loop. In absence of feedback loop, you're simply relying on analytics. You're simply analyzing based on some formulae or some element of a model, and the model spits out a result that you're hoping that it's the right result. AI only works if it has a feedback loop. How effective is those insights? And you need a human today to drive the effectivity of that result, which means that if I get a no on my mortgage application, they have to be a human to be able to validate those results and say, this is probably effective or this is right. And every time you provide that validation, it goes back into the model to learn from that, right? So there's a learning component, and that's why machine learning, the learning is the key word in that whole element. So what we've done in those models is provide the feedback loop into these machine learning models. And if you don't have the feedback loop, I think that's a problem. Then you're simply relying on the static models, which has what we in the industry call a decay. So your models decay over time because the world around us changes. So does the data that comes from that world that we live in. And so you have to make sure that your models are relevant and the decay is addressed. And you're dealing with what we call as data pipes. So you have different types of pipes that you consume the data from. And sometimes those pipes break. Sometimes the data is stale in those pipes. So there's a whole sort of coordination that needs to happen from the various data sources, if that makes sense. I know it's a complicated response, but I figured I'd simplify.
You managed to explain AI architecture in 1 minute, which was awesome. So award should be given over there. So with that being said, because I think a lot of people do question where the data comes from, and that is one big talking point. People as users feel protected over their own data. They feel maybe vulnerable. Their data is being given out. When it comes to large organizations such as kind of Apple, Google, these big conglomerates that we saw, Facebook was another great example. Then we saw the rise of Web3, and one of the Web3 arguments was that it is you in control of your own data. Is Web3 and new data management, is that going to be a threat to the data architecture that's been built surrounding AI?
I wouldn't call it a threat. I think it's a transformation, and that's a loaded question, but I'll give you an example of this, right? That I've been having this conversation for quite some time now in the traditional finance world. So if you look at traditional finance, what goes into pricing and risk, so whole element of the industry is to maximize our profits, and you debate between what's the price of an asset and what's the risk, and you figure out what you want to do with trading strategies around those two constructs. So today you have data like CPI and PPI and labor data and the beige book. So you have all this data that's evolved over time, over hundreds of years, that you can trust. It's a trusted data, you have the data source, and all the AI modeling revolves around that trusted data. Suddenly comes in DeFi, and I'm just giving a contextual example, which really has no standards. These are automated market makers, decentralized exchanges, centralized exchanges, layer one protocols. So there's a mishmash of all the sort of ecosystem that have evolved that facilitate moving of these tokens and transactions. There is no standard. So how do you trust an AI model? How do you trust the data that could be maybe a result of wash trading, or that could be a result of, and not the real trading between humans, could be bots who are trading between themselves. And that has a false sense of community, has a false sense of volume, and that can really skew your results. Suddenly now an ecosystem looks more attractive and it's really not, right? And so a lot of work that we're doing in the industry is to provide that level, that sense that now I'm looking at in evaluating these DeFi token and their prices in terms of, do we have enough community? Is the community real? How many people are actually contributing to code besides just the price data that you get from exchanges? And that's a huge problem. So if I take the same context, when you differentiate between TradFi and DeFi and move that into Web 3.0. So Web 3.0 is a whole different model where suddenly now I'm giving you the ownership of data. As one of the constructs of Web 3.0 is ownership economy, right? It's ownership-led economy where you suddenly bring your talent, your data, yourself, and you're beginning to monetize those things, which historically, let's say your healthcare record. It's your data. It's all about what's transpiring in your body. It's all about what you've done. And that has insights into it, that if it's worked for you, then chances are the people of your race, of your DNA background, the same things could work for them as well from a healthcare perspective. So the healthcare data, which is longitudinal set of data, is your data. And if you can monetize it, then you need to own the data. You need to have a construct of identity with that data. You need to have an ability to be able to temporarily lend the data so it's not stolen, that it's always going to be your data, that you could give it for clinical trials, you could give it to your physician for temporary access, but at the end of the day, it's still your data. Now, if you were to move to that construct, suddenly now I'm relying upon not just a singular massive data sources that's a part of a healthcare information system or it's part of an insurance sort of platform. It's now outsourced or crowdsourced to every single individual who owns that piece of data. So suddenly now my AI modeling not only the data modeling changes, but the incentive economic system changes too. That if I need to use AI in your data, I need to pay you for it. And so suddenly now the economics shifts. So to me, that's more of an economic shift than the technicality of how I'm going to receive the data. I don't know if that made sense, but it's a long-winded response to the transition from AI, data modeling, and Web 3.0 constructs.
Sending money internationally? We have the newest solution. Stop paying for SWIFT transfers. It's expensive, and you'll wait days before you see a result. At Fluid, our international transfers are instant, free, and safe. Sign up and download the app today.
I think you've explained it very well. And I think something that's interesting is it always goes back to the end user. I think for me, looking at this, data at some point seems like, based on what you were saying, could be a financial tool for the mass market.
No, absolutely. And I think we have the notion of semantic web. And I think I did write about this extensively in terms of what is the Web 3.0. And I wrote about this as future of work, that the way we monetize, the way we go to work and given our 8, 10, 15 hours a day and get paid, the whole idea is that semantic web becomes that every piece of your data is your data. So every link, every like that you do on LinkedIn, every post that you post, right now the platform monetizes it. You are just relying on your eminence. In some cases, you get paid depending on the volumes of following you get. But what semantic web does is gives you the ability to take this data and put a framing around it, which has the element of its usage. Is what element of the data is valuable, and what of that data is non-valuable, and who wants to extract the value from the data and give you things in return. I think that's going to be a fascinating technical innovation that's going to come with Web 3.0. And we've been debating semantic web now since, 20 years. But I begin to see that, even though it has been failed as an experiment in the past, because everything is, you view data as a longitudinal set of bits and bytes, it's in this holistic sense, but it's been transforming over the years. And I believe that's going to change with the advent of Web 3.0, and most importantly, the economic models that Web 3.0 will drive.
I now understand the original answer when I asked you what kind of thing is going to be the main catalyst today. And you said, well, in AI, there can be DeFi, there can be DAOs, there can be Web3. It does seem all encompassing. And I think that's so fascinating for someone that is working in this space or watching this space grow. As someone that might be watching from the sidelines, that might be looking to get involved, looking to invest, looking to ride this next wave, we are seeing global spending is here. So global spending for AI is expected to double by 2024. It's going to be $110 billion.
Yeah.
What kind of things would you look out for if you were looking to be part of this journey, whether you are an organization, whether you are a VC fund? What kind of things would be stand out for you or really integral that you see?
Yeah, to me, and I've been solving this debate in every job I've had, every organization I've worked for, including the startups that I work and invested into, is how do we sort of position ourselves as an entity? So first thing is clarity and strategy, right? At the end of the day, there's enough data out there, there's enough data to procure out there, there's enough incentives you can create to be able to engage the community, to be able to extract the data and drive value. So one thing is strategic fit, because just because you have tons of data doesn't mean that you can monetize it, right? So figuring out which business you're in, what type of data you need. Second thing is, I think, data acquisition. And that's an important part because there's a lot of noise out there. And there's a common saying that you need to extract signal from the noise. And I see that a lot in crypto industry, that a lot of this data is trapped in Twitter chats and it's Discord channels. And my biggest challenge is how do you extract the signal from the noise? And there's a lot more noise from that. And so I think having a strategy which allows you to understand what signals are, what are the indicators of the problems you're trying to solve, which is the strategic fit nature of your targeted, problem solving elements. And the third thing is talent. It's really, really important. And that goes back to the whole fact that, you will have a lot more jobs created because there are new fields, there are new elements. And as long as we're keeping up with that evolutionary change in our thinking and skilling up, and creating new skill sets, which is the next generation is more data savvy than the previous generation, and that generation can then really pick up. I think talent is the biggest challenge to me in the entire, even though we have like close to 9 billion people in the world now, in this space, data, AI, blockchain, and the application that emanate from these technologies, I think talent to me is the biggest inhibitor at the moment.
Wow.
If that makes sense.
It does, absolutely. So encompassing that, you've given us an idea of the scale of new technology. You've mentioned just the sheer magnitude of new users and new waves of people that are constantly entering the market. If we turn it now to CBDCs and take a look at the potential and growth potential from that perspective, we're seeing MasterCard and Visa are pitching central banks. We're seeing this kind of race, who gets there first and how they achieve it. Why would central banks want to join the CBDC race?
Yeah, no, this is also a loaded question. I actually spent a decade in this in IBM. During my tenure at IBM, and when I was founding, Digital Asset Labs, I also built a network that was dealing with stable coins in terms of issuance from a third party that actually has a banking licensing and central banks. And if you look at the spectrum of the use cases that have evolved over time, anywhere ranging from economic inclusion to making the T+0 and T+1, which is the capital market security settlement, that has been the range of use of CBDCs, so central bank digital currencies. So as an ultimate fungible and settlement instrument, the initial rhetoric was that the Bitcoin was viewed as a anti-sovereign instrument for settlement, a store of value, medium of exchange, as an instrument. And due to that threat, the understanding was, let's go and build a digital version of our fiat money, which will allow us to compete with the crypto industry. Of course, that transitioned to, we need to modernize our financial infrastructure. That transition to our payment systems are old, which is true. It takes forever for us to move the money globally. And while every country has solved the real-time payments in their own country, but moving money across borders is still a challenge. And so I think CBDC has taken its narration over time, and it's transitioned into a whole different rhetoric. But I think, to me, CBDC may be an essential element if we have to truly get into a digital way of doing things. Our existing payment systems are not exactly meant for digital handshake, and the velocity and veracity at which we transact, the 9 billion people in the world will transact. So you have to change the way we move money and the way we move things of value. Crypto has shown us that you can have a global system. And the Visa, MasterCard, and the card networks are trying to piggyback and understand their place, their role in this changing world. And because it's a regulated, sovereign-issued money, it makes it easier for them to piggyback on that. But I'm sure there's conversations happening that helps them understand how crypto can change as well.
And they're also trying to get a piece of the pie.
That's right. Well. They have to understand the business, because that disruptive element in the rails, as we call them, rails is essentially the term we use that allows them to move money. If that is itself changing, which I just don't understand how, if we are building stable coins, if we are building these rails, blockchain, they're doing what Visa, MasterCards do today. So the question then becomes, is this an overlay for them to provide the endpoint services, which is ensuring that you have KYC, AML regime in place, and ensuring that you have all the due diligence, and ensuring that you have all the point of sale system connected? So they're trying to figure that role out, because at the end of the day, what Visa, MasterCard provides, the DLT and blockchain infrastructure inherently provides that from the get-go.
Now, we spoke on a panel just over a year ago, and you said you were working on 19 central bank negotiations or discussions on how they could implement central bank digital currencies for the end user, for people that are part of these nations. What does it mean for them to have a programmable digital currency?
Yeah, CBDC being programmable is a little bit of question mark there, only because it's sovereign issued, and all you can essentially do is do what you do with typical fungible assets. You have money supply, and that impacts credit and everything else that go with it. I think what you can probably do, and that's why I think the retail element of it, the common man who looks into it, you will compare in the Western world with Venmo and with PayPal. Like, we already have this digital money. It does the same ability for me to move real-time money between these different entities. And I think in some countries like China, for example, ECNY and what WeChat and Alipay has done, and in India you have Paytm. So every country has their version of what CBDC would solve. And so I do question the effectiveness of CBDC. However, I think that if you look at so you have different spectrum of payments. You have remittances, you have peer-to-peer, you have B2B, account-to-account, and you have this hundreds of millions of dollars that transfer between the various investment banks around the world. I do think that what CBDC will do, at least in a positive light, will give the national economic bureaus of every region, country, a real-time visibility of where the money is moving, which today takes 3 weeks to a month before they can realize the movement of money and what's actually happening with the economic system. At least with CBDC or digital version of the fiat that we use, that will lead to real-time visibility, which I think is enormously powerful. If you're in the game of a country really adjusting and pivoting in real time its policies, and I think we are a little far away from that. A second thing I think is financial crimes, which is the biggest challenge is privacy preservation. That cash is ultimate form of payment. It preserves my privacy. I can give you money and it's ultimate peer-to-peer, and I'm still able to preserve the privacy, which I think digital fiat or CBDC will take away. And in the Western societies, that's been the biggest debate, and that's been the biggest inhibitor from adoption of CBDC by the mass media to say, hey, we'll have a government oversight, in which many citizens may not want to have that oversight. Other than that, I think we have a comparative element. And I think that, and one last thing, Jessica, is the bigger challenge is security settlement. And not many common people understand this, but when you actually buy and sell your stocks and your bonds and any security, it takes 6 to 7 days behind the scenes for that to settle. And I think that financial infrastructure is quite old, and we do need to fix that. We need to fix that so it can provide more transparency and give access to financial markets to common people, which is not the case today, I think.
And listen to that, I absolutely agree with the points that you've made. And I think banks currently seem like a black box, and there's certain elements of the banking system. I'm based in Dubai. As we know, it's the future city of the world, fantastic in so many regards. You can still, and they still accept checks as a form of payment, which seems absurd to me.
We do that too in the US.
In the US as well. And it's just, there are some elements that haven't caught up yet. I've heard everything you've said. However, as someone that was introduced to Bitcoin in 2015, there is the counter argument of central bank digital currencies. And for a lot of people that have been well known in the field of cryptocurrencies, especially Bitcoin, they do see CBDCs as a threat to maybe freedom and something that might be a concern for users. So what would the counter argument be? Is there room for both? How would you see the future digital asset space moving forward?
There is definitely room for more than two. I see the room, and this is my article. I wrote an article on rethinking liquidity in crypto, right? In that article, I did write about the fact that we should stop treating this as a binary between CBDC and Bitcoin. I just think that and I view crypto as fifth asset class. I view crypto should have its own economic system. It has own demand supply. It has own generation of exactly what you do with CBDC. There's a generative element to this where money is introduced in the economy and money is withdrawn from the economy through vehicles like quantitative easing and quantitative tightening, which dictates the money supply. That's the whole interest rate sort of debate that's ensuing at the moment with dealing with inflation and so on and so forth. And so in case of crypto, you have Ethereum, you have Bitcoin, you have 11 other sort of dominant layer 1 protocols, and they have their own economic system. They have their own mining, minting process. And I believe that as a fifth asset class, all the assets should be priced in any of the typical layer 1 that is fungible, that actually provides liquidity. And that provides two things. It provides a competing ground to the existing economic system in its own sort of class. And second thing, I think it gives an opportunity for this fifth asset class to grow exponentially. And that competitive element will at least hopefully streamline the existing world, and the central banks recognizing that there's a competing system, so not being frivolous with their policies and not being frivolous with how much of money they issue, because it has dire economic concepts which we as common people on the streets would face due to inflation and things that we experience at the moment. So you have all these economic policy agendas that need to be considered, and if there's a competing system, then you would want to do better, I think, and which is the genesis of CBDC conversation, that we need to have CBDC because you have Bitcoin. Suddenly now you have two different systems. So the money supply would be better, which means that if fiat offers a better return, better stability, better safety, then why would people not move to fiat, right? So I think this plays for both. I think this plays for more fungible instruments in the world. Exactly how this plays for more sovereign currencies that we begin to use. I mean, World Bank and IMF use the basket currencies, which provides that stable ground, I think.
And you mentioned the competitive nature there. Is that also between countries when it comes to CBDCs? We've seen the race, the US and China, who's going to win the CBDC race? We saw Norway recently enter the game when it comes to CBDCs. Are you expecting some to integrate faster than others in the next 12 months? And is there a competitive nature that maybe surprised you along the way?
There absolutely is. And I think since the pre-pandemic supply chain issues, we've seen the last 3 years has been just enormously impactful and interesting, and this will go down in history in terms of how the world has changed, how pandemic has changed the world, both in terms of how we view money and how the governments have, in some cases, faltered, in some cases, has much more nationalized agenda. So I think Globe is what used to be a globalization effort post-pandemic has become, a complete opposite. So from that perspective, what I have seen is, of course, with China's introduction of EU1, which was the CBDC, not on blockchain, but still a central bank issued digital currencies, piggybacking on the innovation that WeChat and Alipay has done in terms of QR codes and having a de facto mobile devices driven payment systems in general, which is not the case in West because we're still relying on point of sale systems, and that's still going through its own evolutionary changes. The West, of course, view this as a freedom agenda, and there's competing debates because of the democratic nature of the economies where people respect their privacy. They want to have the privacy, and there's a whole debate that CBDC will take away that privacy. So I've seen, and not to mention the US dollar dominance, right? There's it's still a world's reserve currency, and it's an interest of the United States and its allies to preserve the US dollar's dominance as its reserve currency to, again, going back to the post-Cold War era, policies where I think we begin to look into this in a different lens. That now, with what's happened with Ukraine and Russia and the different blocs emerging, this is China, India, Russia, the BRICS, the Brazil, Russia, India, China, and South Africa has joined that group to ensure that any inflationary effect of dollar doesn't impact these countries, because at the end of the day, commodities are priced in USD. And if USD dollar induces inflation because we are printing $2 trillion during pandemic, that has a global impact because suddenly now the commodities are priced in US dollars. So you have all these geopolitical global macro issues having an impact, and that's leading to many countries having a competitive effort to say, hey, we need to change the way we look at things. And with the annexation of what's happened with Russia and all the commodities that's come from Russia and in the whole region, they have less incentive to respect US dollar as a world reserve and more incentive to push an alternative currency that allows them to be able to do the right trading without having the effect of sanctions and so on and so forth. So you have all these geopolitical issues that we begin to see. So besides the competitive element of which country wants to have the dominance and wants to get ahead, there's a technological race that's happening between Europe, US, and China in terms of having the right CBDC narrative. There is a commodities war that's happening around the world because this is the Bretton Woods 3 argument that has been going on for quite some time. I think these are all competing priorities, and I don't think technology alone is the answer. Technology is definitely instrumental and catalyst, but I think it'll take a lot of political will to get beyond that and solve this at a global scale, if that makes sense.
And you're also working kind of with cryptocurrency organizations. You travel the world as well. So you must see kind of firsthand when it comes to end users, people that are familiar in the cryptocurrency and Web3 space, some of the challenges they overcome with navigating, even living cross-border, even living between the US and Europe, for example. There's banking challenges that come with that, and financial services don't really help navigate that so easily. I know one thing that we're building here at Fluid Finance is really that ease of use between the Web3 world and then the traditional banking world, CeFi and DeFi. Is that also something that you're really desperate to see in this day and age?
No, I am. And actually, I'll give you a little, I looked into Fluid Finance and intuitive user interface. It's, you've labeled things in a much more clearly understandable way with DUSD, which is the digital USD and digital euro, and ability to top things up like a, simplified model of not over financializing and creating new terminology, which is what we see in DeFi world. This whole new terms that have popped up. The lingo itself is intimidating sometimes for people coming from outside, which is not the intent of crypto, to be honest with you. And so one thing I'll tell you that while crypto and the software behind it is eating, or it seems to be eating the world by force, there is still a massive challenge of digital penetration. All my CBDC projects that I worked on, it was not about the ability for us to have a tokenized version of fiat or build new rails. That was never in question. The biggest challenge of CBDC adoption, for instance, is digital penetration, is ability for folks to understand what's a wallet and how do you keep your money safe. Because suddenly now, just like you keep cash in your wallet, if CBDC is in your mobile device and you mishandle it or misplace it, then you lose it. And so what is the fiduciary and prudential treatment of those assets that may be self-custodied by individuals who may not be savvy enough to be responsibly dealing with these assets, right? So to me, I think there's a very, very small sect of the world that is actually savvy. Even many of us who are in crypto, I don't think they fully understand the gravity of the fundamentals of key management, which is driving the entire industry. The entire industry is the reason why we call it crypto, because there's a lot of cryptography behind it, right? And those are fundamental building blocks of the industry. And I just don't think many of the leaders and many of the folks who are in the industry fully get the gravity of what it means to keep the assets safe and to ensure we have some level of audit trail behind the transactional element of it. Of course, there's a rhetoric: blockchains are transparent, you can track everything is an open, but it still requires a certain skill set to understand what's happening. It's not exactly transparent, if that makes sense.
It does. And I always like to end these podcasts with an action note for our viewers that are listening and watching. When it comes to riding the next wave of this digital era, we've covered kind of AI, blockchain, we've covered everything today. We've gone through a range of topics. What would you say for people to remain exposed in the next 12 months, ride the wave, and also maybe make the most of it?
Yeah, no, I think the biggest challenge, Jessica, I have is keeping up. I spend 4 to 5 hours just reading all kinds of stuff. And now I'm focusing on quantum from past 2 years because that has a potential threat vector to, again, the construct of keeping things safe in the crypto world. I would just say that pick the basics, understand the basics, because you cannot build this massive castles on foundation of knowledge that doesn't exist, or you don't have the basic understanding. So I would go and to all the newcomers in the industry is have a basic understanding of what crypto is and what is the fundamental elements. Find an area of interest that you can build upon. Each one of us have some area of interest. You may like finance or healthcare. Pick that area and apply that area to the underlying fundamental principles of DLT and blockchain, which is the foundational technology behind the Web 3.0 and then eventually metaverse. And I think that'll give you a sound understanding for most people, and then you build upon that. I will still say this, that there's a massive knowledge gap in the industry. There's a lot of rhetoric, and I would just say that we need a bit more in-depth, like a few double clicks on each one of those topics that we discussed today to have a deeper understanding, which will then direct your investment decisions, that'll direct your career decisions, that'll direct your strategic decisions, only because you understand things better, if that makes sense.
And to stay on top of it, because things change 100 miles an hour in this industry as well.
That's right, to pivot. And the pivot is such a critical term in the industry that everyone's pivoting all the time. Like even, I'm sure Fluid Finance will understand the market needs and say we need to pivot because the user behavior has changed in the past 1 or 2 years. And that pivot will only come with continued understanding of the industry. Otherwise, you're simply, gambling.
Absolutely. Well, at Fluid Finance, we have calls maybe 4 times a week to say, what's going on now? How is everything going? Do we need to add in the other user flows that as the industry changes? So, Nitin, thank you so much for your time today.
No, thank you for inviting me here. I enjoyed the chat.
Absolute pleasure. Thank you so much. Thank you so much to everyone that is watching as well. Do make sure to subscribe for more content like this.
Sending money internationally? We have the newest solution. Stop paying for SWIFT transfers. It's expensive, and you'll wait days before you see a result. At Fluid, our international transfers are instant, free, and safe. Sign up and download the app today.